Let's bring on board Rahul Sharma, Director, Head, Technical and Derivative at JM Financial Services, joining in with us this afternoon as well. Rahul, very good afternoon to you. And, obviously, let's talk about the Nifty. That was just a couple of points away from that. In terms of the picture, benchmark indices, how are you seeing that? And today we have a change in terms of the broader markets as well, because mid-cap has started underperforming the benchmark. So, your view on both these things?
Yeah, very good afternoon. So definitely markets are at loggerheads with respect to this new all-time high, and we all have been keenly waiting for. But clearly, the momentum indicators are suggesting that the thrust that is required for the all-time high to be taken out may just not be there, and we may see a slight pullback before we eventually make it. So from a positional basis, the structure and texture, both of them are still bullish, and dips are to be bought into. But the way we have been seeing distribution happening every time we try to attempt that all-time high, the previous all-time high that is on the Nifty, we've seen pullback happening. Now, there are two reasons. One is the banking index, which was the sector leader in the entire up move, has struggled to gain further momentum. It has been trading in a run in the range of 43,400 to 44,000, not been able to take out any of these levels decisively since last so many days. So eventually, I think the thrust has to come from the banking space. Financials have been doing relatively better. That has been a silver lining in the last two trading sessions. But like you rightly said, mid and small caps is where the follow-up action is missing. And we feel that in terms of Nifty pullback, a small pullback, not like a major one, but 18,700, one more round may happen. We can look to buy in that dip for eventually a target of 19,000 on the upside. So the strategy for the market should be to buy on dip. As far as Bank Nifty is concerned, that is the weaker of the two indices. And in case 43,400 does get broken, that will call for a fresh shorting opportunity on the banking index, where we may see another 800 to 900 points slide happening in the banking index. So fingers crossed as of now. It's best to take one level at a time. The way Nifty is shaping up, I think 18,700 should come first before we eventually hit a new all-time high.
Well, when it comes to the Nifty PSU Bank Index, we are seeing such a very sharp down move in trade. In fact, all constituents of the Nifty PSU Bank Index are also trading in red. So what is your view when it comes to PSU banks specifically?
Yeah, so PSU banks haven't really participated in the rally as far as private banks have done. And in fact, from May onwards, we've been sideways on the PSU banking index. Now, the good thing is the higher low structure is still intact in this entire consolidation for the PSU banking index. That is around 3976 is the recent low that the index formed. And we believe as long as the structure remains intact, there is a good chance that PSU banks play catch up. So we think that this is more of an opportunity to lap on to some of the relatively better setups in the PSU banking names and go on the long side. So this is more of a slightly medium-term outlook, not like a very short-term one. But if you have the patience, I think this is the risk reward, especially in some of the names like Bank of Baroda, Canara Bank, to name a few, look very attractive at these levels for around 10 to 15% upside, maybe 5%, 5-6% kind of a stop loss can be had from current levels.
Well, one stock-specific question on Max Financial. Now, that stock has surged over 20% in the last 3 days. It is trading above its all 50, 100 and 200 day moving average. How does this stock look on the charts?
Yeah, so the interesting bit is the open interest has shot up significantly along with this move. So there are positional commitments being made on the long side. Now, as far as headroom is concerned, there is another around 100 rupee upside that one can expect. Technically, we made a high of around 874 in January this year. I think this high should be tested anytime soon. Clearly, the kind of move that we've seen in the last trading sessions, along with the kind of volumes and open interest action, even the delivery quantity has been quite significant, especially in the yesterday's session, all point out that there are long legs to this rally. We may cool off for a bit, consolidate for a couple of sessions here and there. I think that structurally we are headed for 875 and above as far as Max Financial is concerned. So as we speak, I think 720, 725 becomes a crucial base area going ahead from here, and one can have an exit strategy in case that level breaks as a stop loss for the trade.
Sure. What we also want to know also in terms of just when you look at the whole Nifty IT pact, obviously we'll be having Accenture, which will be reporting its numbers globally today. But Nifty IT, what's the view? Do you see that, the sluggishness that we've seen there is actually done and maybe an improvement there? Or would you wait something for the numbers to come out of the company in this quarter before you actually look at the IT space?
Yeah, so that's a very good question. In fact, I would love to be a contrarian in the IT space. Now, all the negatives that are there, like possible 2 more rate hikes by the Fed, taking slightly longer than expected. I mean, they are factored into the prices. Yes, yesterday Nasdaq was down a bit, due to which IT index is reacting negatively. But I think incrementally, what is happening is from a slightly macro technical perspective, in terms of risk reward, IT is one of those index heavy components which has not participated in this rally. And given the fact that eventually, Fed maybe 6 months later would be looking at, reversing firmly on their interest rate strategy, I think IT should, do well. So if you have like a 3 to 6 month kind of a perspective, IT is a good value buy at these prices. TCS remains our topic, when it comes to taking a positional bet on the long side. Even from a risk reward perspective, some of the mid cap IT names can also be considered, like LTI, Mindtree, and the likes. So we are, positive on the IT space. Yes, there will be a bit of volatility for sure, but eventually we feel that the IT index is headed for more upside in the medium term.
Right, Rahul, and want to know your top picks. Yes, you were mentioning Bank of Baroda as one of the names. Any other names that you're liking in the market right now?
Yeah, so index heavyweight. This is another index heavyweight which we like, in particular Reliance Industries. This stock has seen some good outperformance happening in the previous week. This monthly also, the stock has stood. In fact, tried its bit to take the 2600 mark. I think there are even as a short-term trader, even as a positional trader, there is a good 10% upside to be had in Reliance. In the very short term, we may head towards 2600, 2620. One can, for a trading bias, one can go along with the stop loss placed at 2520. But positionally, we feel that this stock can head towards the 2750 mark. So both short term, medium term, we are positive on this one, and we feel that this stock is due for an up move from current levels.
Well, thank you, Rahul, for all those insights.